Alrighty, look in, ladies and gentlemen. I hope you're all doing well. Your favorite technical interpreter here, Greg. So let's get straight into it, ladies and gentlemen. As always, we're going to have our wonderful overlay right here telling you how the stochastic RSI works so you can follow up and understand what it is that I'm trying to show. Actually, in fact, I'm going to highlight immediately. Yesterday, I had a meeting with my Academy members, and shout out to you, dear Academy members. As you can see, exactly as we spoke about yesterday, 7,517.12 was tested. We are already seeing a breakdown, more of that sort of bearish side playing out. Although, realistically speaking, we are still moving sideways, moving into that overlap of the bullish bearish momentum, and so we're about to see the bullish momentum start to fail, the bearish momentum start to become stronger, and in essence over the following period it's quite apparent that we're going to see more of a breakdown, the price action going down, leading lower and lower. Now let's see why we're thinking that. So in the 5 minutes right now, although it's not all that important, we have roughly about an hour and 19 minutes to go from the time I'm recording this video. We still may end up seeing roughly around 7,486 within the framework of today's session. Why? Because as you can see right here on the 30 minutes, we are still bearish. Arguably, that near-term support level probably will play that major role, if at all, because we are right now kind of going through that entanglement, mixed behavior, nothing really certain. So let's skip forward as we were looking. 30 minutes basically bearish. Basically, you guys need to understand the simple idea: the larger the time frame, the longer duration the movement. As you can see from sort of being zoomed out more, so we recognize how the price action recognize that 7,517 absolutely accurately. And as you can see on our stochastic RSI, we have far more of a bearish tendency. That means we're going to see price action going lower and lower, basically giving us a lower price. How about the hourly? Hourly, in fact, since we are just that close to the end of the session, basically is already talking about tomorrow's session. Tomorrow's session, in fact, appears to be a lot more bearish than today's session. Today's session is more so about that transition or a retest of that very same 7,517. But as we can see, we are now already on the 4 hourly, which is pretty much similar to the representation of the daily chart. And we're already seeing that in cross over. Basically, we're becoming again bearish dominant. Bearish dominant is indicative of a change in direction. As we see, we are stalling on a support level we expected. We're now getting again a lower high, which is within itself is quite indicative of a continuation with a downtrend. Now let's look at the daily. The daily still is bullish. So Greg, what does that mean? That means, as you can see, the way this chart is looking right now, that still means that we may end up retesting this 7,517 at least one more time. Is that certain? Not necessarily, given how bearish all the momentum below the daily is. The more the bearish price action will play out, the more that will interpret or translate into our daily chart. The more that translates into our daily chart will appear a lot less and less bullish, subsequently becoming even more and more bearish, just kind of natural. Now let's look at our weekly. Our weekly is really pointing out towards a longer duration movement, and that's where my expectation stands with testing the near-term 7,200-ish handle, given how that is the median of the current wider channel we're working our way within the framework of. Yes, I know it all looks very confusing. Here, let me help you out, boys and girls, and make it simpler and cleaner. Although it's kind of a shortcoming when we do that, because that way you can guys actually, I know you can see a lot of the mess, but you can also see what it is that I'm trying to say. Now I'm trying to say that we had basically we're working our way into a harmonic pattern very well known as a head and shoulders, within which internally we inside the head, well, in all of them really, we had in a harmonic pattern of a head and shoulders. So you can see this one is playing out pretty nicely and as expected so far. We have our left shoulder. Now we are completing our peak of the head and moving into the head's neckline. So if we're really going to see the continuation of that bearish price action, that is quite indicative of testing the short-term support and resistance levels that are in that vicinity, which is, as we said, 7,200. In fact, on my Discord, I mentioned 7,100, really to be more precise, because this thing probably will take a little while. Then we're talking about 6,700, which is at the bottom of the channel, but more so we are talking about a very strong symbolic level that we saw before, 6,666, played a major role on the way up. Is it necessary to have that level being retested aggressively on the way down? Not necessarily. Why? Because it is very, very probable that in a longer duration future, when we are going to be establishing our right shoulder, as you can see on the screen right now, we will be then retesting that very same level, presenting now as resistance, not as support as it was before. Arguably before it was, again, both one and the same. It does transition from being a resistance to a support, again, given the structure. So what are we really seeing? Basically, to sum it all up and keep it simple, we are seeing on the monthly, for example, a transition that was highly anticipated and expected. I spoke about this in my Discord and community. Shout out to all the beautiful legends. I told you this is part of a grander bearish transition. Yes, it does take a little while, and patience will result with nothing good. Just be patient, see how it plays out. If you understand what is happening, of course, you'll be able to play it accordingly. Right now, what we're seeing is a transition, as we said, into that head's neckline, and then we're going to establish a shoulder. So there will be a rally post this drop into the 6,100 area, 6,000 area, that whole handle area. Although it's quite wide, it's $1,000, I understand, $100, pardon me, but still it is a, although it's a wide area, it is kind of a normal range for the price action to get entangled within the framework of. We've seen the, SPX test $100 up and down on a consistent basis. That ebb and flow pretty much results in that, not an issue. Our 3-month, this is where things get very, very interesting. And right now we're seeing a transition. We are bearish actively on a longer duration trend, but we are seeing a potential crossover. But mind you, that the more we're going to see that bearish price action play out, the more the divergence between the two forces will occur. And the more the divergence will occur, the more it will be a bearish signal to the market, subsequently leading to the major players executing their positions in one or another direction, wink, wink, hint. And that will lead to the indicator to appear even more bearish than what it is right now. All of it really is a part of a larger trend that is occurring, and since we are now just seeing the corrective partition inside of it, this is why we're skipping the 12 and the 6 months. They are kind of irrelevant. I know they appear to be bullish, and in fact to some extent they are. It just does not cancel out the major correction that we're going to be having within that framework. Also, unfortunately, the 6 months will flip over and will appear bearish temporarily once we will until we complete that bearish process. That is, well, I've said this before, I'm going to say it again for those who don't know. My estimate is to end up leading all the way to 3,300 on the SPX. Yes, I know it sounds insane, borderline, and almost something that's like something that cannot happen, but those who are familiar with the technical tools and the technical processes understand how that works, understand why exactly that particular anticipation. That is it pretty much. I'm going to try and keep it short today. Like I said, that this is all we have about the SPX. Those who want to join the community, I highly recommend. Now is a very important time to do so before the market dives deep very fast. In fact, at this point, this is no longer a warning. This is just me showing you what is about to play out sometime soon. And for those who at least follow and listen, will be in the know. Again, does that mean you guys will not be, reactive or impulsive or emotional about it? Of course, you probably will be, but at least you'll be knowing what is going on. Of course, my community are very well aware of what's going on in the market. I highly recommend you all consider joining right now. Yes, ignore this tier. This tier is basically, it's not really there. You can join $10 a month and you can sort of get the basic perception of what the Discord, what the community offers, what it's all about. $90 to get exposure to all the wonderful information that is on our Discord and a lot more advanced knowledge about how technical things work. And if you want to join the One-on-One Academy, you'll have to reach out to me through the Discord. And there you and I will have a Q&A session, short call, where we'll get to know each other. And if everything goes right, you'll be able to sign up to my academy, and I'll teach you how to be your own independent analyst, really, and just know where the market is headed without depending on what Greg thinks or shows, or when is the last video, or so on and so on. The price of the academy right now is $5,000, and those who will hurry up, the first two places, will get a $500 discount, so that ends up being 4,500 USD for an extended. Now I'm extending it a little bit. I'm basically keeping the same amount of material, so to speak, the same amount of topics. It's just that I'm extending just a little bit. And basically is a 12 session ordeal or so of sorts, that with 12 or 11 depends, that we go over various topics from analyzing the major indices, the independent individual assets, the various tools that are necessary, the harmonic patterns and everything in between, the momentum and so on. Of course, as well, we will talk about energy, oil in this case right now, and various other related topics, safe havens such as gold and silver, and their relationship with the broader indices. That's just part of the academy. Of course, there's plenty more that I'm not mentioning right now. It's going to take too long. That's it. I hope you all enjoyed this video, and I hope to see you in the next one. Have a wonderful evening. Bye bye.